Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for the week ending in September 26, 2009. Last week I mentioned that the market closed a significant gap, and notice what happened this week. We pulled back within the last 3 days of the market. So this tells us that 108 is a very critical spot because it closed the gap, and gaps always make for great support and resistance, and in this case it acts as a very strong resistance. So I wouldn't be surprised if this is the top of this entire bear market rally. Okay, so just keep that in mind. That's always a possibility. You throw in the overbought stochastic. The last time we had an overbought stochastic, the market pulled back several weeks just to relieve itself from that overbought situation. So again, I wouldn't be surprised if we have some major pullback just to relieve itself out of the overbought. And of course, we have some pretty big MACD divergence going on, so telling us that this leg higher is a much weaker leg and it's not as strong of a momentum as the prior leg higher. So all of these things, the overbought stochastic, the MACD divergence, and the significant closing of the gap and the resistance level all points towards a pretty strong sign that the market is possibly topping, or at least it's near a very significant top. Overall, what we need to do is continue to be cautious in this market. I told you last week to be cautiously long, okay, and that holds true again this week. Now, I'm not saying to go ahead and short the market because, well, the uptrend is still valid. We are still making higher highs and higher lows, okay? So we still want to be bullish, right? But we don't want to be that overly bullish, okay? Because like I mentioned, we're pretty darn close to a top if we haven't already hit the top already. So, but nonetheless, the uptrend is still valid. Not until we see lower lows and lower highs, then can we say the uptrend is done and we're switching to a downtrend. Okay, but we're not there yet. Okay, actually, where we are is at another critical support level. This previous high is getting retested as support right now, around the 104 level. So the only question that we have to ask ourselves is, will buyers coming this time, just like it has the previous times, and continue buying this market? Unfortunately, I don't have the answer to that question, right? If that holds true, then I will expect the market to shoot for 110. 110, nice even number, and that's also where the 50% retracement level is when we slapped on the Fibonacci. However, if the market breaks through, I will expect a retest of this 50-day moving average. That always acts as a pretty strong resistance secondary to the 20-day moving average. So when the market corrects itself, notice how it's working itself out of the overbought, which is good. It allows itself to come out of the overstretched, overbought situation. Okay. Now going into the VIX, this 23 price level is acting as a very, very strong barrier. Once again, notice how it tried multiple times to break under this 23 level, but it failed to do so. So it's telling me there's some underlying fear that's still lingering in the market. Even though we're making higher highs, the VIX is not alleviating itself or showing a decrease in volatility. So you can kind of tell that the trader sentiment is still somewhat fearful because it's not correlating with the market where it's going lower, making a lower low. Actually, it's showing divergence where the market made a higher high, but yet the VIX is still within that previous support level. So going back, just to recap, don't be the first one to jump into the pool, okay? You want to wait for the market to just stabilize around this price level, around this critical support level. If you see the prices kind of stabilizing, you see buyers coming back in again, then start dipping your toes into the water. Keep in mind that there's a very good chance that the market has hit the top right here on Wednesday. Okay, so just keep that in mind, that that is a possibility. But at the same time, you still want to continue buying the dips because the uptrend is still valid. However, I keep reiterating that continue to be cautious in this market because you don't want to be caught exposing yourself for too much risk in this market at this current price level.